Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the capitulating market more broadly. A lot of selling taking place in the last 24 hours. Bitcoin's lost a whole 10%. So we'll discuss there's blood across the markets, and we'll be talking about if that is blood to buy or blood to wait on and sit in. We'll also be talking Ethereum DAT. FG Nexus selling almost 11,000 ETH for share buybacks. We've been talking about the problems with DAT, so we'll touch on that as well, if that's a symptom of a broader problem. And finally, Kalshi raises $1 billion round at $11 billion valuation. So we'll talk crypto prediction markets as well. And apparently Polymarket want to raise at around higher as well. So that's one thing that, people are still throwing money at, even in this aggressively bad market at the moment, or declining market at least. We'll get into all of it as usual in just a bit. I've got Legendary and Brett in the co-host seat with me today. Cannot wait to get into it with them in just a moment. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is clearly very, very risky. It's also very, very volatile right now. So we don't know anything for sure. So please proceed with caution and exercise your own judgment at all times. With that out of the way, Legendary, it's Friday. It is the 21st of November. How are you doing? How are you feeling?
GM Jim, you are painting unusually graphic pictures, saying whether this is blood we want to sit on, sit in, bathe in, and wait. That is not something I would have expected from you starting the show today.
Gotta get comfortable. Gotta get comfortable in the blood, Legendary. One thing I've been thinking, I've felt, on the one side, I said to you before the show, I think we need to be I did a bit of a tour listening into other commentators, other people who talk about the markets, and I feel we've been too positive. And I don't mean positive in the sense that, oh, we're bullish. I mean positive in the sense that it felt like there was more despair out there than the way we communicate things, partly because I think we're slightly more aloof about the markets. Maybe we're more long-term focused, but also we've played the market pretty well. We've been de-risking since the summer, so it's been okay. But I do think I've actually found a bit more energy in the downturn. I don't know if you've felt this, or from me, or even within yourself. I feel like I've got a bit more energy in the downturn because it means something's happening that is different to what was, the consensus play. And I feel like that actually gives people an opportunity. Like, when things are just, mulling along, going in the same direction, everyone's saying the same stuff, I kind of get a bit bored in a way. And I feel like this has given me a bit more energy because it's introduced something more challenging to consider. What do you think about that?
I said it in the Telegram chat. Like, find yourself a woman or a man in your life who looks at you like B-Check is looking at the short button or has been
I don't
looking at
know.
it.
I don't know why I've enjoyed it. So maybe it's because the first time I've ever done it. It's the first time I've like shorted in my life. It's the first cycle I've been learning how to short, and it's just exhilarating. It's just
When
been
I was on the call with you after the show, remember when you told me that you looked at the thing, and next cycle, if it's a 4-year cycle again, when the top's gonna come in, and you can short ETH again at its next top, you're gonna be 40 years old, and now you realize you still can short ETH. You can short it all the way from 3K down to 2.6. And I think this is giving you the extra energy that you don't have to wait extra 4 years to be able to short ETH again.
Do you know what it is though? Is the reason why I was so upset that I let go of my short from like 4.2K, which in hindsight was like perfectly articulated, perfectly expressed, reading all the right signs, but failed on the execution by not holding it long enough. Maybe because it's the first time I ever shorted. So it got me thinking like, damn, I think one of the great things about doing what we do when we turn up every single day is we get such fantastic indicators from the
Yep.
media side, from the trading side, that I feel like the tops are going to be easier for us to call because we were able to do it in January and we were able to start de-risking in the summer. And I was just like, damn, I wish I could have that opportunity back because now it's going to be 4 years again until you get that moment. Because in my opinion, obviously I could be wrong. I don't think we're going back to 4.5 now. So I don't think I'm going to get that chance again. Maybe it'll be a different asset in 4 years' time that's completely overheated. But I bet that we'll be in an excellent position in 4 years' time because we'll keep doing this. We'll keep turning up every day. And just the data and the senses that you can get from doing that is so excellent. So I was a little bit, I'm already upset that I can't get that position back, but that's my thinking. Brad, bringing you in here, curious for your thoughts as we kind of reflect on the market and some of the data points we get and kind of thinking forward. What are you observing?
First, we'll start with a sound check because I switched from my headphones because it sounds better this way. Does it sound good? Okay.
Sounds good.
One, like just hearing you go through that stuff, I'm like, yeah, of course he's happy and things feel right and like it's all good. It's because you have been bearish for a while and like now the market has caught up to your bearish sentiment. So like now you're synergized with like what your feelings were. You're not no longer feeling like you're maybe misreading something. And yeah, you were right. You did well. Yeah, like also I sit here and I'm looking at the screen. It's deep red. It's 10%. It's 20%. It's everyone's all bleeding in front of us. And I recall or I think back to I don't know, even just last quarter, everyone's like, oh, like it's gonna rip into the end of the year. Like this is the thing. And like everyone was consensus calling like that as like the point at which everything was gonna stop. And then like everyone would sell off and we'd all like go off into the sunset together and we win. And then it always cuts off below or at or like not at the thing that you think it is, right? So consensus was end of the year. We had the 10-10 crash, and then everyone is now dying. Everyone who was looking to that same time is bleeding out because it ended up happening a quarter before, which is kind of funny. Now, I'm still hearing people say that this isn't the end, right? Like you were talking as if 4 years is coming back, cycle's over. I would say I hear voices in the other direction where like maybe there is still another leg with us, but like it's looking grim. And I think every day that we have a 10% drawdown, it's looking less and less likely that we return to all-time highs in any like short-term time frame, right? Like it just takes time to build up confidence and get this stuff back. But yeah, just some observations.
I like it. Yeah, I mean, to your point, I agree with you that there are other voices who will say that it's just a drawdown at the moment. And then I guess people need to try and formulate their own view as to which one they lean more. And when we talk about these things, you know, we've all run out. I mean, the ideal way to look at it is some kind of probabilistic model. Like, am I more likely to think that this is going to happen? Is this more likely to happen based on where we are now? You know, if you ask me now, do I want to buy Bitcoin? It's like, well, I want to buy it more now than I did when it was at 120, which is the same type of phrase that I used to say at the top of the year when it was like, hype is better to buy at 13 than it is at 30. So, you know, on a relative basis, it is improving. And then you just kind of, I guess, decide, you think about, you know, you run it through your model and where we're going after that. Ledge, another thing we've been talking about, two questions I have for both of you actually before we kick it off, because I think this is going to be a difficult day for a lot of people, and just want to answer, I think, two important questions. The first is more to do with the philosophy around the space and the security around Bitcoin in a sense. So I think one of the more, I'd go as far as to say depressing aspects of this move down is the lack of belief, or the losing belief of maybe some of the OG people who've decided to tap out. But not just the people with like $1 billion who have Bitcoin to sell, including some of the other more established people who have noted maybe a degradation in the quality of conversation, the ideals of the space from which Bitcoin started. Are you concerned, Legendary, from on that like philosophical level, if Bitcoin still does what it was supposed to do when it is now an asset, a mostly ETF asset owned in ETFs, custodied by BlackRock or Coinbase and things like that, when its origins were far, far different? Do you have any concerns from that perspective?
Not really. When I joined, like from when I joined crypto 2016, 2017, whatever, barely anyone is still around from that time. So most people have left way before this cycle even started. In crypto, you age quickly. You're in. Most people leave within one cycle, even they don't even stay to see the second cycle. So there is certain fatigue kicking in, and some people have been in this for way longer than I have been. Some people have been around for 15 years. Like, hell, do I want to be in crypto for 15 years? No, I don't want to be in crypto for 15 years. I will find other things to do. I never had a job, which I had longer for 2 years because I got bored. So, and fatigue is probably way more accelerated in crypto. So don't worry about that. In terms of the ideological change and crypto's BTC's original philosophy, yes, that is gone. But I said it multiple times on the show, and I still believe that for BTC to really manage to get mainstream adoption, it's not going to work in a like parallel shadow society. It's only going to work if it's going to be integrated with the real world, with regulations. Now, this is not something that, you know, idealistically people have wished for, but this is how the world plays out and how it works. And obviously, things change when BTC becomes more of an institutionalized asset, as we're seeing right now. I think I said it even this week. If the buyers on the ETF said mostly happen institutions, then I think for us it's more important to start to think, when are these institutions buying and when are they selling, and not so much more like, oh, which Bitcoin whale is still sitting on one bill and when are they going to sell that? So it's just something where you have to stay mentally agile and adapt for that, or find another new asset class or something else to do. I get it. I get the frustration of people who are like, oh, this is not what I signed up for 10 or 12 or 13 years ago. But, you know, you're not going to change that now. And realistically speaking, it is what it is. And it was the most likely trajectory if BTC hits mainstream adoption, then in a world where like mainstream finance is accepting BTC. So this is not a surprising outcome.
Okay. I mean, I would argue it's not even necessarily what I signed up for 4 years ago or 5 years ago when I came in. So there's an aspect where in the adoption from the Trump administration and family, I feel like whilst it is markedly beneficial for the crypto industry for it to get built out in America, that they took over and started to bring regulations and things, and people don't need to be to fear getting prosecuted all the time. That's also had a bit of an effect. Brett, I think we've spoken about this before. I don't believe you're too concerned from this perspective, but do you have any additional thoughts on kind of, Bitcoin above everything else here at this point? Because the markets is following Bitcoin's lead here by selling off so aggressively. But do you have any more philosophical concerns?
Not a philosophical concern, like just whatever. One interesting anecdote that I saw that I think is probably worth discussing is crypto X AI and how the same people, that same entities that have been harvesting Bitcoin for the longest time, these miners are. I saw speculation that like they are now starting to see that it is more profitable to divert that energy towards AI, right? So they're divesting.
Yes.
And because of that, it is like it may be contributing to a little bit of this. Now, is that true, or is it just a someone coming up with conspiracy theory? No hard evidence, but I think it is something worth discussing as we head into the next 5-10 years of this industry, when it is paired with AI and the growing appeal of using that same infrastructure. Now, I know it's not 1-to-1, but I know that there are parallels there, and that the specialties that these people have map over pretty well. So the implications of that downstream are just, obviously there's a lot of sell pressure that can come from that, which leads to instances like this. And then long term, it starts questioning the security budget of Bitcoin, where as the price of Bitcoin does not continue to accelerate at a rapid pace to keep up with the halvings, then it becomes less profitable to run the miners, and they're going to seek opportunity elsewhere. And AI is, as we're seeing, at least, they're getting beat up a little bit right now too, is just something that is perceived as the next great opportunity. So for people to transition is not surprising.
Yeah, I'm really glad you brought up that point. I saw that tweet as well, and I've just sent it to Legendary. Max, if we pull this tweet up that Legendary is sharing, this was a response to a tweet by DCF God, who had said, to me, there's just no way some market maker blew up and now it's all over. Because that's one of the arguments going around as well, right? Like, God damn, this Bitcoin selling is absolutely relentless. Every day at like 9:30 a.m. Eastern time, it's just getting hammered down, and then even outside of those hours as well, but just absolutely relentless. He said, like all the market makers combined, probably don't have multiple billions of Bitcoin and ETH sitting there as inventory to dump. And then Crypto Condom, who, by the way, has a ridiculous name. I grant you that. However, one of the best accounts I have discovered in the last few months. I don't know. I think it's pretty much an OG in the space, but I've, for whatever reason, only discovered it in the last couple months. Outstanding calls across the board, super responsible, never hopium, just like really, really thoughtful, accurate calls. Highly recommend following Crypto Condom. He had this response to say, I believe it's miners actually. Miners are finding AI pivots far more profitable than Bitcoin and selling their treasuries to fund the conversion. And then sure, that brings to light a lot of the issues that Brett just discussed. And that actually maybe leads into the broader thought that I've been having recently, which is, okay, fine, Bitcoin represents digital gold in some way. And this is the core thing I guess people need to grapple with. Is Bitcoin truly digital gold, or did it in some way represent outperformance? And the reason why people were so allocated to it, fine, there's a digital gold aspect to it, but the point was it's supposed to outperform things by more than other things. And for a period of time, it did that, and therefore it makes sense to hold. But when you've seen what the AI bubble has done to actually great businesses, proper companies, and you can feel like you can get outrageous returns in investing in normal companies. There's been that. And then even when you go further down the risk curve in the stock market, there's been all kinds of quantum stocks, AI stocks, and various other stocks just absolutely ripping. And it's not obvious that outperformance exists only in crypto now, especially as maybe the vol goes down as it receives all of this regulations and more security. So that's definitely something to chew over as well, I think. The The second question I had for you guys before we get into the main stuff today, and just so you know, guys, if you're listening in, appreciate it might be a difficult day. It's red across the board. We're gonna get into the the price action specifically. We're gonna talk about our positioning, what our thoughts are, what's going to come next in the market. But I thought it might be worth just for a moment, Ledge, to discuss, if we hadn't de-risked in the summer, because I think what will happen here is, okay, fine. Maybe some people de-risk in the summer feeling comfy, and that's great. That's great for them. But in this scenario that you didn't do that, in the scenario where you don't have much to show for this cycle so far, whether you think it's at the end, whether you think it's at the middle before it pulls back, whatever, how would you what do you do there where you've allocated a significant amount, maybe at not great entries, and you're either down or you're flat or you're up like just a little bit, but you're getting a bit nervous here? Like, we've probably been there in the previous cycle, where we just weren't quite sure what to do. Like, it just wasn't quite enough that we had made, or we didn't feel like it was, at least. So what would you do if you were in that position, if someone's kind of working their way through that in their minds?
As someone who has, like, in the last cycle, round tripped more than 80% of my port and more than made all of that back, the biggest thing or the biggest learning is to survive. Like, be able to survive until there is the next opportunity, the next thing, the next mania, the next AI bubble, the next meme coin bubble, the next robotics run, whatever you're going to have. Be able to survive until then to profit from asymmetrical returns. Now, the thing with that is that crypto is getting, in English also has been saying that in the YouTube comments, getting like less Wild West every year, and the asymmetries might become more isolated, but there's still going to be plenty of opportunities to outperform and to make money in this cycle. And even to people who have been saying, how could I have made money in this cycle? If you, and of course, like, hindsight is, different kind of vision, but there's been so many things, even in this cycle. You had the meme coin mania, you had AI, you had hyperliquid season, you had the plasma pre-sales, you had the MegaETH pre-sale, you had BTC still running up from 16K to 120K. There's been like many pockets of opportunities, and there's going to be, you had Zcash running, all the things. And you will have these pockets of opportunities again. So the most important thing is to survive until then. And then, realistically speaking, have a good job. Like, stay, if you stay in crypto, make sure to have a different income stream if your portfolio is simply not big enough to be able to live off that. And then at some point, you also have to face this very uncomfortable question, this very difficult question of looking at your performance and looking at the performance of buying just BTC, buying an index, buying the NASDAQ over years. And if you can't outperform that over a long enough time period, then you probably want to keep DCAing into an asset like BTC or into the NASDAQ, and have a savings plan, a weekly, monthly savings plan, whatever, and keep that up over multiple years. Like, my Bitcoin savings plan, I am outperforming BTC, and I have been outperforming BTC with what I have been doing in my portfolio and all the things we've been doing with the modern market, with the advisory side of things, etc. But I still have my savings plan in BTC. Like, for years, I've been buying the same amount or now a bigger amount of BTC week for week for week for week for week. That's completely separate from my trading wallets. I'm not touching that. I'm not looking at that. That is still ongoing. And realistically, at some point, you have to look at the portfolio and ask yourself the question, have I been outperforming? And that can be like as a trader and creator, as someone who's working a Web3 job, like whatever you want to bucket into this. Or would it just be better for me to like max my income and max my savings rate into S&P 500, NASDAQ, BTC, whatever that's going to be for you? But no matter what the answer to that is, definitely survival is the most important thing if you want to have a chance of making it back. And making it back takes patience. You're not going to make it back now.
Yeah.
When BTC is dumping another K as we are speaking, and down to 81K, or flirting with 80K almost. You're going to make that back in an opportunity, in a market, an environment where people are getting damn greedy again and aping into all the different things. This is the period to make it back, not now on some like ultra degenerate shorts or wild speculative trades.
Yeah. I think that last part is particularly particularly correct. Like the conditions now are not, unless people are only thinking in terms of buying spot and holding and waiting for the market to go back up, right? If you had taken if you still believed that the market is going to go down, you can obviously take the other side. You can go short. I'm not, this is my first cycle doing that. So I'm not saying you're going to make it all back that way. But volatility technically should be a money making opportunity. Volatility in both directions should be a money making opportunity, and maybe you could consider that side of things. But I remember just a quick anecdote, Brad, and I'm curious for your thoughts before we get into the bigger discussion today. Like I remember in 2021 holding all of my ETH, not all the way down, and then it bounced back to like 1.9k or something after it being super high. And I'd sold a bunch, but not enough at all, and I puked it all. Like I capitulated like all of it because I thought like I need to just be safe. I need to like reset and then like clear my head. It's like I couldn't think straight holding all of the asset that I was so frustrated with, or that I knew that I'd made a mistake with. So I capitulated like all of it. And then I think 2 weeks later or something, because when the market goes down, and this is assuming we're going into a down market, which I could be wrong on still, you actually have the time to like buy it back at the same place. Like when the market bottoms out, if you are in an actual bear, which might not happen if there's some V reversal and Trump says something and sends the market higher, then you actually get some time to buy it back. And I bought all of it back when I kind of changed my mind and realized like, no, I have conviction in this. I think it's a good thing to do. Maybe lost a bit of money on it, but I was able to do that. So I think sometimes maybe resetting, getting rid of some of the assets might be helpful to you. You have to decide that for yourself, though. Ultimately, that's a hard one to decide for yourself. Brad, curious for your thoughts on this one. If someone's maybe struggling in the specific situation they find themselves in now, given that the market is continuing to turn against us. Final thoughts, and then we'll get into the market itself and talk about what's going on.
I don't know. I think you guys nailed basically everything. I'll just reiterate your last point with something that I've said a few times. Everything always takes longer than you anticipate it taking, right? We had the big 10-10 cascade and we're like, oh my God, it's done. And then I think it was a couple days later, like, you know what? Actually, things are kind of green. We're feeling good again. Like everything recovered. And then no, 2 weeks later, a body floated. Then no, 2 weeks later, now the ass fell out of the entire market. It's like, not saying that this is indicative of or downstream effect of that 10-10 thing, but it's just like psychologically there was trauma. And then we sat there and we said, oh, never mind. We can just resume up only the week after. It's like, no, like people are impacted by that. Some people blew up. It takes a while for that to play out. Now the same thing. This stuff is on a scale large enough that I think I'm comfortable saying, just like you, I don't anticipate a V-shaped recovery. Like that's an exception, not a rule. Which means with stuff like this, it's just going to take time for people psychologically to want to get back in the game, and that will present an opportunity that spans over the course of days, weeks, months, as opposed to singular weeks, moments. So don't feel any rush to dive in or have any stress. Like just look at this, look at your portfolio, make the best decision, and go from there.
Yeah, sorry, go on, Legendary.
No, 100% agree with that taking time aspect of all the things. And even if there is some downwards volatility to capture, and even if you can make money shorting the market now, it is so extremely volatile that I just don't see the risk return at the moment to play around with leverage in any way, shape, or form. Like I'm honestly surprised that we've seen 1 billion in liquidations in longs yesterday, because with that volatility and with how NASDAQ has been very volatile as well, and how we have seen this translating way stronger to BTC and to crypto, it's just too risky of a game to make a leveraged big move in any direction right now, in my opinion. If you want to buy the dip, cool, buy the dip, but buy it spot. If you want to short, maybe don't make it as in a way that you think this is going to be the recovery for having missed the bull market.
Whoa. Let's not criticize the shorts here just yet, Legendary.
No, I'm not criticizing, but you're not doing it. You are no, but I think this perspective is important. Like you made a ton of money this cycle, you took profits, and you're shorting with a relatively small amount of your portfolio.
Yeah, I think that's fair.
That's healthy. That's the healthy way to do it.
Yeah, and by the way, I think one of the other things, coming back to what Brad was saying, that it reminded me of is this. And look, maybe you can't take this moment back, but people are always too slow to protect the money that they've made, but they're like very fast to try to like make it. And it kind of comes to the question all the time. It's like people always ask you what to buy. What do I buy? What do I buy? What do I buy? But they're never asking like, what should I sell? What should I sell? What should I sell? What should I protect right now? There's just never the same urgency around that. And suddenly Bitcoin's down $40,000 off its high. Like when you say it like that, suddenly when I'm looking at the price right now and it's 81K, like, yeah, it's going to make you feel a little bit sick inside. It makes me feel a little bit sick inside when I even though we were like relatively on top of this, I de-risked out of some of the Bitcoin as well, like pretty late, all things considered. I was still selling a little bit yesterday, back at 91 or 2 or something, after maybe de-risking a little bit like 106 and some other stuff as well. So it's not, it's not easy to catch the top, which is why I guess we argue in the summer, like, you gotta do it over time because you're never going to catch it. But having said that, you've got this time at the bottom to hopefully get some time to reflect. So hopefully this conversation is helpful, guys. It's not a straightforward time. It's definitely difficult to manage. And we hope that the conversation is helpful to help you do that. But look, guys, as we said, we're going to get into this market in a second because there's blood on the streets, and we're going to talk about it more specifically, maybe go through some assets, what we like, what we're expecting moving forward. But before we do that, we just want to shout out our partner for today. We are sponsored by Yeet, of course, the crypto casino that's done more than $800 million in a bit more than 6 months, founded by trusted names like Mando, KBM, and pro poker player Ben Lamb. We are users of the site. Legendary is famously known as Limbo GCR over there. So supernatural partnership for us. Just a reminder to only gamble for fun and what you're comfortable with. And to help there, we are giving out, just like we have for the last God knows how many weeks, $500 each week randomly to players active under the Modern Market affiliate link, which is in the comments. Legendary is going to drop it there. So do check Yeet out. They have a number of crypto themed games, and their sportsbook just launched as well. So stay tuned for our giveaway at the end of today's show. We'll be giving out $500 to one of the users on the affiliate link, which is in the comments if you want to participate. So we'll get to that towards the end of the show today. Stay tuned for that. But let's get into the price action to get you up to speed. Everything's happening, as Legendary said. Price is going down as we speak. So I'm just going to refresh the page to make sure we are live and as up to date as
Tether
possible.
looking strong here.
Say again?
Said Tether looking strong here. Strength.
That plus 0.23% is looking pretty nice returns at the moment. So Bitcoin's down 11% on the day at 81.5K, down 15% on the week. ETH is down 11, almost 12% as well, to 2.6 now. XRP is down 12% to 1.8. Well, an interesting point someone made very recently is that normally Bitcoin's down a percentage and then everything else is down more. Right now, these things look fairly similar, which is kind of odd. XRP is also down 12% to $1.85. BNB is also down 11% to 802. Solana down 13% to 123. Something that's moved further is Hyperliquid, down 18% today to $32. So it had been really strong at around $38, $40. Finally experiencing a bit of the sell-off. Maybe a little bit of conversation about these unlocks that are happening potentially next week, or maybe another airdrop at some point. There's like a little bit of a few questions about more supply coming onto the market in that regard. So could be to do with that. Could just be, the market is turning down here.
I don't know if it's just my own perception, but I feel like every time there's a major move, Hyperliquid actually also moves down aggressively with it. And my theory is it's constantly just because it's a big liquidation moment. People are utilizing a lot of their Hyperliquid in order to fund their actual their leverage accounts. Yes. So it's like people are forced sellers every single time.
I was going to say that's literally what I thought this morning as well. I think a lot of, at least this was a lot of the activity before, a lot of hype, like big hype holders will borrow against their hype to buy more hype and do various things on the EVM or on Hypercore or whatever. And so foreseeably, when you see this really, really sharp downturn in price, if people aren't paying attention closely, you could see how that can go badly. I don't know specifically if that's what's happened here. I actually wanted to check hyperliquid liquidations for borrowing against hype, but I wasn't sure where to do that. I think there might be one website where we can check that in a bit. So that's a good take. Getting into the meme coin side of things, again, everything's like not that much more down than Bitcoin. Like Doge is down 14% when Bitcoin's down 11. Pepe's down 16, Pump's down 15, Trump's down 10, Pengu's down 20. Gosh, Pengu's got absolutely smashed if you think about it, but it's down beneath $1 billion now. The only reason I'm not singling out Pengu, by the way, I still love Pudgy Penguins. I still hold it. It's just, I guess because I hold it, I'm like always looking at it more. And yeah, down beneath $1 billion FDV. It was already down there before this 20% move. So it's just something I'm noting. SBX is down 18% as well. Fartcoin down 22. So really no respite there on the altcoin side of things. Getting into the headlines, which we're going to discuss in a moment. Today, we've got Bitcoin crashing 10% to 82K, well, down to 81 now, blood across the market. It's got the Ethereum DAT FG Nexus selling almost 11,000 ETH for share buybacks with 40,000 ETH remaining. I think Brett's going to take us through that headline in a little bit. I've said last week and previously on the show, I want to see more pain for these DATs that have done some, that are not looking too strong. Before I'm confident saying anything's bottoming out. Kalshi raises $1 billion round at $11 billion valuation. I'll take us through that towards the end. Prediction market, still people want to allocate money there. So I think it's worth touching on that as an additional opportunity, maybe something more optimistic. Some notable sales. CryptoPunk floor on the NFT side is down 10K in one day to 80K. Still 29 ETH. So the ETH floor is the same, but now it was 90K yesterday. Now it's 10K less. I think the market bottoms at a CryptoPunk 50K floor. That's just a little thought that I'm putting out there. The rest of the roundup, Coinbase introduces ETH-backed loans just as ETH is tanking through the bottom of the market. That's good to know. MegaETH announces USDC pre-deposit campaign. Maybe Brett can tell us a bit about that in a second. 21 Shares launches leveraged Dogecoin ETF. You know, you've got to sell something now when you hear something dumb like that. Jesse Pollack, co-founder of Base, launches Jesse, trading at 14 mil FTV. To be honest, maybe you've got to sell something when you see that as well. I'm not a huge fan of the content coin, creator coin arc. And former BlackRock employees bringing stock perps to MegaETH via Hello Trade. Maybe Brett can mention that as well. That was pretty interesting to me. So guys, that's the roundup to get you up to speed with what's been happening in the last 24 hours. We're going to get into the big headline stuff in just a second. But before we get there, maybe coming to you first, Brett, because there's a couple of interesting MegaETH notifications there. What do you want to tell us about this USDC deposit scheme, pre-deposit scheme? Sounds pretty exciting. Can we allocate some capital here, or how does it work?
Yeah, busy days. So this specifically is us announcing, yes, our pre-deposit bridge. So as you guys know, we have a native stablecoin, USDM. We want to make sure our DeFi ecosystem is well capitalized early on. So this is an opportunity for people to come to Ethereum mainnet, drop USDC, and then you'll be given one-to-one USDM on mainnet day one. No rules, no conditions. Now there are some conditions though on who can actually participate in this, and that is based on Athena having to do some of the minting on the back end. There's some custodial laws there, and with them doing this stuff, they have restricted everyone you see here on this restricted list. Notably, it includes the UK and the United States. I know it's unfortunate. I, as a U.S. participant, would not have been able to participate in both of these things like leading up to this. So I'm on the other side of it. I understand how frustrating it is, but things of note are that there's no individual cap. If you participated in the pre-sale, even if you just registered, we need the KYC information to allow for people to ever be able to mint this token to people. You will be given the opportunity to deposit and get your USDM on the other side of the bridge. So that'll kick off next Tuesday. This is just like a pre-registration informational thing to let people know it's coming. And we think, or I think, I don't know if the team does, that in this market environment, people don't really want to buy the coins. So thankfully, you have productive things you can do with your dollars. This will have consideration towards the rewards campaign, which is 2.5% of the MegaETH supply that will be issued down the road.
So you said that there's no cap on our amount that we can deposit.
Individual.
Is there an overall cap? No.
Yeah, 250 million is the overall cap of the.
Right.
Of
So okay, so if you hit that cap and someone hasn't got in, there's no like, you know how before it's like, okay, we're going to do allocations, make sure everyone gets a thing. Now it's first come, first
Yes.
serve,
Yep.
get in, otherwise you're out.
Yep, correct.
Good. I like it. Gas war.
Gas war,
and
it's a, like
just a 250 mil deposit and just front runs everyone else. This would be, I mean, not hilarious from Brett's perspective, obviously, but it would be quite an entertaining outcome.
Yeah, obviously. I mean,
I
so
just
like,
miss
the thing
gas wars,
here is
man.
we have a lot of information on this stuff, right? We have the KYC information. So like, to my knowledge, we know Justin Sun isn't in here and he's going to like farm everyone else and like, you know, deposit $140 million. So it'll be interesting to see who actually participates because there are some constrictions. So you can't just bot it, right? You can't like set up a machine to do some of this.
Because you've already got the KYC.
It has to go through Sonar, like, yeah. So like there's a little bit more of a process. So it's a little more fair for the smaller guys in that regard.
Nice. Okay, well, that's exciting. I'm interested to look forward to that. Conscious of the time, we've only got 15, 20 minutes left of the show. Anything else you want to call out before we get into the main stuff, or should we just head right to it?
Give Brett a minute or so to speak to Hello Trade, because I think this is really interesting as well.
Okay, yeah, let's do that then, Brett.
Yeah, I'll speed run that. So the other one is Hello Trade, debuted yesterday. We've been working with these guys for a long time in stealth. It is the two creators of iBit. So from BlackRock, it's Wyatt and Kevin are the founders. They literally built iBit. So Wyatt is the technical guy, he's the CTO, and Kevin is the product guy, and he's on the front end. So they raised from Dragonfly. This is hey, we raised. This article is actually a feature in Fortune that they had, and they just transcribed it over here. And yeah, so they're coming to build a equity perps platform on MegaETH, focusing on the mobile experience initially, and then going to a desktop iteration for pro traders. They're perceiving their competition as Robinhood, right? They want to bring perps and perps on equity specifically to the world without restrictions. They have some ways that they think they can achieve that with MegaETH.
Nice. Okay, exciting. That'll be pretty cool to look at as well. That sounds fun. I do think equity perps, we've been saying, I think this is one to participate in and get to know. At the moment, I am doing the little 10K challenge on Trader XYZ, participating in the equity perps only trading competition. We're like trading against, I think they're saying trade against the AI algorithm, and if you win, there's a 50K prize. The prize is not important to me. The thing that I'm trying to do is get used to how the equity perps market operates and how it's different to the crypto perps market. It's definitely less volatility on a relative basis. So just kind of feeling it out there, because I think this is going to be a big market moving forward into the future. So thanks for that update, Brett. Let's get into the biggest headline of all. Ledge, maybe we'll do 5 to 10 minutes here. Bitcoin's crashing. I think it's just recovered back to 82K after it went down to 81 for a bit. Bloods across the markets. What do we need to know? What numbers are you looking at? How are you feeling? What do you see next from here, Legendary?
Got a beautiful segue here talking about iBit. Yesterday, we have seen massive outflows, breaking last week's record, which was the second largest day in outflows with 866 mil. Yesterday, we've seen a staggering 903 mil in outflows. And that was following quite an interesting day on the stock market, where initially things looked good, but then the Nasdaq did take a turn and initially had moved to 23,000 and then dumped to 22K. It's down 2% on the day. Looking at other equities, it is a very, very red picture, red light therapy across the board, notably with NVIDIA being down 3%, Amazon 2.5%, Tesla down 2%. This is obviously on the time frame of the last 24 hours. If you include the top, and if you look from the top that was hit yesterday, when I, for example, bought Tesla yesterday, I'm down 7% almost on Tesla already. So these figures are more drastic if you looked at the market and looked how green it was before it did turn around. Also, just for the sake of it, checking in with gold. Gold is pretty flat on the day. It's at $4,070. Now, what is going on? Why is all of this happening? What is this volatility in crypto, and what is happening in stocks? I mean, we said a couple of things said that the market is looking at NVIDIA, not only the NASDAQ, but also international markets looking at NVIDIA as well. And then there's like a couple of theories that carry over and throughout the space, one including Japan, and that the carry trade is over, and that the unwinding of the yen carry trade is draining liquidity from global risk assets, that this is something that we are seeing. We've seen the market maker theory. We've seen the fact that now the rate cut of the Fed is not as certain as it used to be, although this has on the day changed again. We are now back to a 55% chance of seeing a rate cut happening. This is after we thought it's quite wild to look at this on a weekly time frame. So yeah, we started even 2 days ago. We were thinking no change. 60% went up all the way to 76%, no change, and only 22% of a 25 pips decrease. And yet again, flipped that picture completely back to now thinking that there is going to be a 25 bips decrease with a 55% chance. So there's so many things going on and so many models that people try to use as an explanation. The mining stuff, which Brett has brought up, which in itself I feel is a valid argument that miners might be shifting to more interesting things over the next couple of years or so. But if you also pull up this chart here to look at Bitcoin miner reserves, takes a bit to load. There we go. This is the blue chart, the white, the blue graph. The white one is the BTC price. You can see that BTC miners have sold their BTC continuously over the last year. So that is probably something that will be impactful looking forward over the next years if they will reassess what they want to use their compute capacity for. So I feel like that many things are at the moment being used to try to explain what's going on in crypto. But for me, I don't think this is a late fallout of 1010. I don't think this is Japan falling apart, or miners selling all of it, or just whale selling, or Wintermute breaking the market. I think we are at a point where the NASDAQ correlation is so strong, and especially then the NVIDIA correlation is so strong, that if people start to get afraid that the AI bubble is bursting, the tech has been overheating too much, and BTC then is the riskier asset. And as you said it perfectly, BTC is outperformance for TradFi, or is how TradFi has been looking at BTC specifically. Then this is the asset to sell first, and it is more affected on a downwards movement than the Nasdaq itself going down. And then all the other layers on top are basically narratives following the price and just additional reasons to be afraid of, to be scared of the quantum computing hacks and all the things, which in itself are like relevant topics, but they're not driving down the price. They're like just additional things to feel afraid of, or to be in this extreme fear mode that the market is in. CNN Fear and Greed Index, I don't have it on screen right now, but it's at 6. It's been at 4, by the way, in April, so we've seen it that low this year. But for crypto specifically, I think that it is a reaction to the stock market cooling off, and until we will have another catalyst, we will find so many more different reasons to say why BTC is going down more, why crypto is going down more, and more reasons of fear to layer into that.
I'm open to all of them, to be honest. I'll say a few things. One, I think there could be something from October the 10th. I don't know. I think we don't know that at the moment. So it could be someone affected for selling in some way. I just don't know if we know the answer to that question. I do broadly agree with you that, I mean, the way that the space was just watching NVIDIA yesterday was kind of, it was instructive to me in the sense that, I don't know, do we even need to trade our assets anymore? Like, are we just going to trade NVIDIA? And then when I watched NVIDIA's price action after, which, by the way, I'm no stock person. I barely own any stocks. I don't really understand that world. I'm doing equity perps now. I'm learning, and I'm always learning. So that's my position there. It pumped on these outrageously good earnings reports, right? really, really strong earnings, beat expectations by a big way, pumped up, gave back all the gains immediately in like within 24 hours or less. And to me, that makes me think that that side of the market is also incredibly vulnerable and weak. And when I feel like I'm kind of saying the same thing over the time, but this is just how I'm thinking about it. When you overlay that with the political cycle, the 1 year that Trump has been in charge so far, the additional 3 years that he's still got to go, I don't think we can go up in a straight line indefinitely. We had the dip for the tariffs. We've gone up only since then, and we need time to cool off. And they're going to need time to stabilize, cool off before they can try and send it again at some other point in the future, I think. So when when you layer that on top of the already incredibly toppy price action, I actually went short in Nvidia as well yesterday when because I've opened this trade perp account thing, trade XYZ equity perp account. So I think is a good risk reward thing at around that area. And so yeah, I think it's a decent spot basically. Brad, what do you think about the general the majors here and the aggressive sell-off? Do you have any particular vision for how these things play out? I know you're not well, you are going through a trade at ARK, although you're not necessarily focused on the trading in the same way, but what's your instinct here?
I think it's pretty hard to not acknowledge that it's a macro driven thing. Like this is beyond crypto, right? Like everything is feeling anxious. I think anxious across markets. So I'll say that the big thing honestly that I'm looking at here is now that you have the Bitcoin chart on screen. I actually forgot about that dip from like 115 down to 876K. Like it actually had a pretty
we've
big
done
fall
this
off.
before,
And
right? Yeah.
I remember thinking then, like, okay, is this actually it? Did we fuck up? Did we miss the top? And then looking at the time it took to recover, right? We said it takes longer than you think. We're seeing our precipitous drop off now. That took roughly March until May. So March, April, May, 3 months for that thing to toil down there and fully recover back to that 100K or looks like 95K mark. So guys, buckle up. It's like this thing it's not just going to be a V shape. Like we're probably going to be in this range for a little bit, whether it recovers or not, TBD. But yeah, man, get used to probably some choppiness for a while. Because I remember conversations, even bull cases for why it should send higher from the 115 to 120 mark was we've kind of been ranging around the 100K mark for damn near a year at this point, right? Like it was a normalized price line. Like everyone was comfortable with it. Everyone, like it was just Bitcoin's 100 grand. And now we're below that. And yeah, I don't know, man. It's we're probably going to see some choppy waters for next few months. I don't think it's over, but maybe it is.
Okay. Well, let's get into the second headline then, Brad, because this is not specific. Well, in some ways, it might be to do with Bitcoin because DATs have proliferated amongst all of the top crypto coins, as well as some of the not top crypto coins. But this is the news that one of them, ETH DATs, has ended up selling a healthy chunk of its ETH in order to share buybacks, which we've been talking about routinely on the show as like a potential concern. What do we need to know here? What are the details? Do you think that there's anything beyond this specific moment to be worried about?
It's wild that we kind of saw the DATs as like maybe this is something that's going to be kind of a death knell for us in the future. And it turns out like this is actually going to be something like it's playing out exactly as we thought. Like it may be the top, a factor of the top. So the headline itself was that the ETH Treasury Firm FG Nexus unloads nearly 1,000 ETH to fund share buyback. Basic details of it is that 11,000 ETH, they didn't cite the actual numbers, but it could be equated to at current market prices around $30 million to fund buybacks of its shares. It will use that $30 million plus an additional $10 million that was borrowed to purchase 3.4 million shares, which is roughly 8% of the float that they had out there. And now they hold roughly 40,000 ETH with 37 million in cash and USDC to continue to prop up their stock price. The reason they did this is because it drifted too far from NAV. And this is the push-pull that we cited a long time ago when these initially came, because you now have a combination of equity and crypto prices that you have to oscillate. You have two cohorts of people to keep happy, right? All of the crypto people were bull posting DATs because they were buying our bags, but these DATs have shareholders that they have to appease. Very similar to the constructions that we've seen inside the space where NFT projects have a token, right? So like trying to appease both cohorts of people typically comes at odds with one another, because you have two things that you're trying to pump the price of, and whether it's doing things with the NFTs to pump the token price, or doing things with the token to pump the NFT price, you're just always going to make someone unhappy. And we're kind of seeing that now, where they're selling off the actual underlying token to buy back the stock price, because that is the thing that they're trying. That's the most immediate customer that they have to adhere to or keep happy, is those people. We're going to continue to see this. There's been theories of the next phase of this being that DATs will acquire other DATs to liquidate the underlying, to then recoup their or like bring back up their underlying. We haven't seen that yet, but I would not think that that's too far from us.
Okay. Yeah, I mean, you kind of nailed it there, hitting all the important points. It's a really we've been talking about this for some time. It looks an incredibly precarious position, and maybe we'll see more of these, right?
Yeah, I mean, they cited ETHZilla sold off 40 million just a month ago. That's why I calculated the price here to get a relative number. So it was 40 million about a month ago, 30 million here. We're going to see more of this, because they're showing their hands and that they have to adhere to or pump their stock price, because those are the people that they report to. As long as the number is trending sideways / down, they have an obligation to try to pump up their price. And only certain vehicles, mainly Sailor, have alternative means of raising funds. Basically, all other DATs only can sell the underlying to then recuperate, or to then accumulate cash to then buy back their stock. That's their only vehicle they have. They can't access any other instruments.
Yeah, indeed. Very, very well explained. Legendary, I just shared a tweet, which maybe you can bring up for 1 second. This is from Chris Boniski yesterday, saying, very respected investor, thoughtful allocator in the space, said, the era of DAT selling has only begun. Just as we went up, so too we will go down. Fairly ominous there, but I believe before we look, we're running out of time for today. So what we'll do, we will hit the final headline very, very quickly, and then we've got to get to our Yeet giveaway to get $500 into the hands of one of our participants who is participating on our Yeet affiliate link. So I'm just going to run through the final headline pretty quickly. We'll come to Legendary for some final thoughts, or maybe wrapping the two latest headlines that we did together, and then let's get to our giveaway for our Yeet participants. So the final headline is just that Kalshi's valuation jumps to 11 billion after raising a massive $1 billion round. Obviously, Kalshi is one of the bigger prediction markets. Kalshi often in competition with Polymarket to be the biggest prediction market, which allows people to bet on the future events. It's raised a massive $1 billion round at a $11 billion valuation, according to someone familiar with the deal. The round comes less than 2 months after the 7-year-old startup announced its previous fundraise of $300 million at a $5 billion valuation. So this is, I guess, what we've been talking about, where things can go bad in certain parts of the market. But Legendary mentioned earlier, there's always opportunities elsewhere. And this does seem to be one where people are very, very happy and delighted to be sending money into the Polymarket companies, the prediction market companies, whether that is Polymarket or Kalshi. This latest round was led by Sequoia, Capital G. Other investors include Andreessen Horowitz, Paradigm. So, really top tier firms here on the VC side. So worth experimenting, I think, in that direction when you have less to do, maybe on chain, on the speculative side, maybe worth taking a look on that. Ledge, coming to you for any final thoughts on whether it's to do with the ETH DAT selling, or a final take on prediction markets before we get to the giveaway for today.
Yeah, hard to ignore the volume the prediction markets are doing. In mid-October, the company, Kalshi that is, reached 50 billion in annualized trading volume, marking a more than 1,000-fold increase from the approximately 300 mil volume posted last year. It's pretty hard to argue with these numbers. And I think we said that the hyper gamblification is a trend. It gets people to be more sophisticated about their gambling because they have a hypothesis, but still gambling it is most people losing money there. Also allows you to gamble in jurisdictions where you maybe could not have gambled. So great product market fit. Not surprised to see them using that momentum and pumping the valuation, raising more money doing so.
Like it. That's fair. Brad, a final take on prediction markets? Any prediction market stuff going on Mega that we should know about?
Yeah, we actually do. But honestly, I just saw these numbers and like, what the F would you spend $1 billion on? Like, how would you even begin to spend that amount of money? You think a highly qualified engineer in like 500,000 a year? That's a full year of a person. So do that times infinity, and you're still not at $1 billion. So
You're
it's
going to
like
buy every single person on crypto Twitter, Brad.
every KOL
They've only got 50% of the people already.
Yeah.
They want
Brad,
100%.
I wanted to comment that initially, but I started to question numbers, especially in a world where Mark Zuckerberg is going around and offering 100 mil signing bonus to open engineers. The numbers don't make sense anymore. It doesn't matter if they raise $1 billion or $1 trillion.
Yeah, I think, yeah, it's actually a great point. It gets to, I mean, clearly there's demand. And so they're like, you know, from the company's perspective, well, maybe there's an argument always to say, well, if you can get the money, take it, because it's going to insulate you through the bear market, through into the bull market, into the next bear market, God knows. But sometimes I think it can be a hindrance when you raise too much. It makes you be a little bit more profligate and you don't look after things as closely. But look, interesting opportunity nevertheless, and good to know about the raises that they're doing at the valuations that they are, to be aware, because I think that's a good way to analyze the business. But look, guys, that is the show for today. We hope you enjoyed it. We obviously now want to get to our Yeet giveaway. We do this every single Friday, giving $500 away to someone who's participated in one of our affiliate links. Shout out to our partner Yeet for that. Legendary, passing over to you here. What's going on with today's giveaway? What do we need to know? Who's in the mix? How much volume have people been doing? What do we need to know?
Absolutely. Let's take a look at the Yeet board first. We've seen a week with another 50K in volume across the modern market community. As usual, being led by Funky with his standard 25K volume that Funky does each and every week.
Literally 25.000.
J-Mouse is on the dot 20K. And then we have Atari God in the third spot with 3K in volume as well. Have a total of 17 people doing their thing. I also love Ollie with that consistency of doing $1 every week just to be in the raffle.
I mean, he was the first winner, right? With $1.
Was the first winner? Yeah, I like that. So he did
still living. He's got 500 more rounds to be able to participate in.
Yeah, he can do this for the next 10 years, like literally. And we did some volume weighting as usual to have more raffle, more entry tickets in the raffle for people who have done more volume. Let's put together this wheel of names. Let's spin it and see who is taking it home $500 for the weekend. This is gonna be J Miles. Yeah, it's not gonna flip over to Atari God. Congrats again, if my mind serves me correctly. Again, right? Third time?
No, second time. No, I'm not sure. This could be the second or third time for J Miles. Congratulations. We're definitely getting into that realm now where people are getting the chance to win for a second or potentially even third time as we've played much more. So congrats to J Miles. $500 will be coming to your account pretty soon. Ledge, I think we'll get that wrapped up in the next 24 hours or so. We'll speak to the team and get that sorted for you before the weekend is over. But guys, thanks again for joining us. Shout out to Yeet for partnering with us every single Friday. And thanks to my co-hosts, Legendary and Brad, for being with me. Reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern Time, live on X Video, YouTube. And you can catch us on Apple and Spotify podcasts as well. Hope the market is treating you well. Hope you're making responsible decisions. Hope you are navigating it well and doing the best you can. And if it's not going perfectly at the moment, don't worry. We've all been there. I think you've got to stay optimistic. You've got to survive, as we said before, and hope it will get better soon. Take care. Have a good one. And we'll see you on Monday. Bye-bye.